All right, guys, let's go over this. It is nuts. Um, Welcome back. Again, if you appreciate this transparency, definitely subscribe, hit the like button, because losing a lot of money here, and I'm showing you every step of the way. And a lot of it is my own manual stupidity again. It's not the automation. I would have been fine had I let the automation do what it's supposed to do. So if you don't know who I am, I'm Ben Collins. I am a CFA charter holder, and I am also the founder and chief investment officer at Options Autopilot. Although, after the next 2 days, maybe I won't be an investment officer or anything because I won't have any capital. I'm just kidding. But in this account, it's just getting destroyed the past few days. So I gave a little bit of a recap, I think Thursday of last week. You can see it is Sunday, April 6th. And obviously it's pre-market. This is just the futures. Friday was a massive sell-off. I was feeling okay going into Friday because we were still technically flat on the year. And then basically things gapped down overnight, and I turned off my automations on two of my automations, the ES and MES position. I got stopped out. And the reason I did that, I guess I should back up, is a lot of the times the way it plays out is, things gap down, people get flushed out, get margin called, then the market reverses. I kind of was thinking that would happen. Of course, this is just one of those scenarios where you can't really predict what the market's going to do, because basically I wasn't at my stop loss before the market closed on Thursday, and then the market was gapping down so far it was way past my stop loss already, so couldn't have done anything about it. I did get stopped out of one of my MES positions. I got stopped out of crude oil. Just for context, guys, this is just nuts. If you haven't dealt with the market, this is kind of crazy. This feels, look at that. This is just insane. It reminds me a lot of March 2009, and so if you were around at that time or read about it, that's basically when the bottom was happening after the Great Recession. I'm not calling for that now. I actually I think that there could be a temporary kind of bottom put in, but I'm not saying that we can't go down farther. I actually think that there's a possibility that we could go down farther than this, but these moves are just so extreme, and it's super frustrating because when you're dealing with leverage, and that's what I want to show, the danger here, is it basically if you held stocks, they drop, you can kind of still hold them, right? If you have margin or you're levered, you're using futures, whatever. If you end up losing your equity and you get margin called, you can't do anything, right? And that's the annoying thing about these. At least in my 401k, my plan is I actually rotated a little more aggressive on Friday because I was like, this is kind of getting out of hand. If it basically stays down on Monday, I'm definitely going to go even more aggressive. I'm probably at 50-50 stocks and bonds right now, so I've been pretty conservative recently. But I'm basically going to rotate even more to stocks. And again, not that I think that the market's fully done going down, but this is kind of the opportunity, if you're waiting for one, to kind of leg into stocks and rotate a little more aggressively. Because luckily I've been more conservative in the 401k, and I can now kind of shift and take a little more risk. But crude oil, I got stopped out. Like I said, these moves are just extreme. I was watching stuff on Friday, and it just felt just kind of like March 2009, right before the bottom. And again, I'm not saying it is bottoming. If there's a lot more people that are margined up that need to get unlevered, myself included, at least in this account, then the selling can continue. It's just super annoying because, again, I'm not a conspiracy theorist, but it ends up just screwing everyone over because the time that you really need to be able to rotate or be able to use your capital, you can't because you're out of equity. And that's, I made the joke, I think, in the last video about, they're like, well, buy the dip. And you're like, with what? So leverage is a double-edged sword, as we talked about the entire time, but here's the example. But me modifying the trading plan and modifying the automation is my own fault. I would have no issue, with this gap down overnight if it's going to hold. It kind of, again, you just never know. I feel like it will, because enough people are going to get hurt by this that it's like going to force more margin calls. You're seeing a little bit of demand here at this level. Can only hope that there's a little bit of demand there, but this is just getting extreme. These are already super extreme moves, and for context, I'd have to double check, but I think that having back-to-back minus 5% days has happened like 3 times in, I want to say 75 years or something like that. And I've been having to explain that to my girlfriend and other people, that this is just totally insane kind of moves and volatility. But this is kind of the world we're in. The VIX is not active right now, but the VIX futures are up even more, right? So the VIX is going to be spiking. Okay. Had to pause for a second and grab a pizza. So now I've lost my train of thought. But basically, this is pretty nuts. These moves are crazy. The VIX futures obviously moving even higher than where they finished on Friday. So that just means more losses for me. And you can see P&L on the day, and I basically lost, I think it was close to 8,000 on Friday. So percentage wise, it's bad. Dollar wise, can come back from it. I can put more money in this account. It's just more annoying than anything. Just feeling frustrated from this type of move, and also not following my own, trading plan, just because everything, hopefully I've been following and listening to my advice that I'm not taking myself in terms of leaving to trade another day. But again, these are such extreme moves. It's just, I would never bet on this type of volatility. I guess I was betting on the opposite, and that's what we're doing in general. But all you gotta do is laugh to keep from crying, because this is not a fun time. And let me look at year to date how much this has swung. So last time we even did a video, it was, we were flat basically, flat with fees. Now year gain down 13,108. So with fees 13,861 or whatever. So that's like a massive swing that you don't want. And again, this is my fault. It's self-inflicted. It's being too, levered just to the S&P. But you can see how much everything else is getting hit. Like gold was down. Let's go to the charts here. And I don't know how it'll be on Monday, or what's going to happen, but you can see how gold fell. I ended up closing my gold position with a small profit just because I wanted to free up the margin. And I moved some money into this account, which is why it's even more insane that that margin is already gone in a single day. And so this is just the example and the lesson to learn, where I'm not saying not to do this. I still think this works long term. And in fact, this is a very good time to do it with VIX this high. This is just historic levels of movement in the VIX, right? Where the VIX ends up probably opening, it's probably at 50. And remember what happened in Volmageddon? That was temporary, but we have to go all the way back to 2020 to be seeing this type of fear. And I would say there's more certainty around what's really going on here, but there's a lot of instruments that people are probably hedging with VIX, which is causing the spike. At this point, I wish I had my call spread still on, but as we can see, definitely very painful. I can free up capital closing down some of the SOFI. You can see I closed down XRP. Again, I was just basically closing things that hadn't gotten hit that much. And also in anticipation, like if those were going to be other people's cash reserves to basically pull in for equity, I figured they would probably get hit more. Who knows? But again, it's just kind of annoying that these scenarios are going to happen, and you can't, like, the ideal thing was if I had more money in this account right now, I would be selling more vol, just because this is just ridiculous levels of VIX, and it should basically be mean reverting. You just never know how long it'll stay elevated, but it theoretically cannot stay elevated that long. So again, the whole purpose, obviously, of being able to benefit from volatility is usually implied volatility is higher than realized. When it's not, it can obviously be extreme. Here's one of the examples of how it's being very extreme. But in general, unless stocks are going to experience some fundamental new shift of moving this much all the time, this is why it has to ultimately fall back towards the average, right? And that's why it makes sense to still do these types of strategies. But again, this is one of those scenarios where it's like you're an insurance company insuring against hurricanes, and then you basically have three hurricanes hit one after another. Not quite that extreme, but just as an example of, it's just very unlikely for this to happen. But this is the example, as it does happen, and you have to be prepared for it, and or I guess risk adjusted for it. I didn't. I was too, like I said, I was too exposed this way. I guess I'll go over. I did adjust these. Like, I basically adjusted my short strike down on Friday, which is again why it's so insane that it's almost now getting close to that strike. So my previous strike was 4,800. I moved it down to 4,600. So theoretically, that would probably lock me in at a loss, but I'm fine if I just get out break even, right, at this point. MES, I didn't adjust these. My other MES had obviously closed. It got stopped out of the open, of course, and gapped past my stop loss. But it closed, no issue with Options Autopilot. So, like, on the bright side, all this stuff is very good tests for our system and our logic that we've put in for volatility. So that's a good thing to see, and obviously makes it worth it to a certain degree to see this happen and go through it. But so even on here, 46.50, like, and also when I was doing this one originally, I did go a little bit wider on my put spread. So all that is to say, that could be positive if basically I don't get a margin call, right? Because now I would have to move other capital around, and it's going to take a little while to get it over here, just because I obviously didn't necessarily think it would be this crazy. But that's just the lesson to learn, and the lesson to take from me. Like, don't over lever to one specific index, and follow your rules. Basically, I was too exposed here. I would basically probably, like, Tom King was back during the Volmageddon. Obviously my dollar amount loss is less, but obviously I was trading with less, so it's percentage wise still not good. I haven't seen him share his losses. He just said he has some. Maybe he will on Monday, I don't know, but we'll see how it all shakes out. He said he's well positioned, so good for him if he is. Hopefully other people are not getting as hurt by this. Some of our users obviously had similar things happen in terms of getting stopped out, but luckily they had theirs and they followed it. And so far, nobody else is getting hurt by this, so that's a positive. And ultimately, a lot of my stuff is set to run on Tuesday, if I can run it. So that would be probably a good time to be putting something on. The other thing I'll comment on is, again, what gets frustrating is these things happen, and if you can't be doing, like, taking advantage of as it's happening, like you have idle cash, then a lot of the times if it snaps back, and again, I'm not saying it's going to, I think that there's enough uncertainty here, and the whole plan of Trump tariffs kind of trying to tank the market to get rates lower, if you believe that narrative, there's no reason for him to shift this kind of strategy in the near term, because I think that they have to refi rates by, I want to say, June or July. I have to double check. So theoretically, if they're not willing to budge until that point, this could be a lot more extreme. But the market is trying to discount that possibility, right? If I'm thinking about it, the market's thinking about it. It's a discounting mechanism. So that's why this is all happening. But basically, a lot of times VIX can just like fall very quickly, right? And one of the issues is, of course, that we're exposed significantly to Vega. And so bad on spikes, but good on the fall. And that's why it gets very annoying, where if you get stopped out, or if you have to basically, close down positions from margin calls, and that's what drives a lot of this stuff, you miss out on, you basically have the wealth destruction aspect. You don't get the wealth creation. And I don't think it's any kind of conspiracy or whatever. It's just that people are trading with leverage, and then a lot of people have similar positions and stops, and this happens. But it almost starts to feel like, well, who's the one benefiting from it? And you can see that this is just jumping around a decent amount, and probably will be worse at the open tomorrow. But just wanted to give a little bit of update. Like I said, my plan basically on the 401k side, I'm going to get a little more aggressive. Here we'll see. I'll probably add a little more capital here, or maybe I'll have to add some capital or close down some positions. But it's definitely feeling like an extreme capitulation, and people are having to sell. They're being forced to sell, and they're probably just getting concerned, so they're just selling everything. It felt that way on Friday as well, a little, like, for the most part, just because it just kind of seemed crazy. Anytime an attempted rally would just kind of get sold off again. But this could be like a total panic opening up on Monday. I mean, some people will talk about Black Friday followed by, I think, Black Monday is a similar pattern. I don't know. That was 87, I believe. I was only 3 years old. But maybe there's some similarities between those two times. Again, I'm not predicting really anything. It's just the market's going to do what it's going to do. I think the market's trying to discount this kind of tariff scenario and figure out, what does it mean for future profits and go forward basis for the market. Because realistically, if he comes up tomorrow and says, yeah, we'll take 10%, like some people are telling him to do, which I don't think he's going to do that, this could all reverse, right? Like that's why it's, again, annoying. It's like, if you can hold on, then it might not be a big deal. But again, you don't want to assume that it can't get worse, because it obviously can, as this is an example, right? I basically assumed that it wasn't going to get worse, so I turned off my automation to not get stopped out, hoping that we would get a little bit of a rally, and then I would probably have shifted. Never happened. And so here's an example of where, should have stuck to the plan and should have had the automation just do it, because that's its job, right? You live to trade another day, and then it would put another one on Tuesday, and then just kind of make it back from there. And it's a lot easier to make it back when you have a smaller drawdown, right? But now we've got a pretty big drawdown that we have to work our way back from. And that's a tough place to be, because then you end up doing stupid things. You take larger, bets to try and, get back, which is not what you want to be doing. You still want to be, managing your risk and using similar position sizing. So, moral of the story is always just use correct position sizing. Like I said, it's not all capital. So I was probably a little more aggressive, but still more aggressive than I probably should have been, just because if we're looking at, percentage returns, it's like, well, it's hard to take I'm trying to think what this would be. Yeah, I mean, ultimately, if this was close to a 40% drop, like, percentage-wise, that's nuts. That's not good, right? That's insane. So that can happen in the context of making, 30% a year. But if you start out and you make a 40% decline, then it just makes it harder, right? If you looked at there's a graph of if you lose 50%, you have to make 100% or a little over 100% return to get back to break even, which is hard to do. Even just in general, it's very difficult to do. So you want to limit your drawdown better than this, and definitely follow your rules you set out. Obviously, just let automations roll. I guess the only bright spots for the fact that I definitely would have lost more on my ARK, but it's stupid that I did it in the first place. But I think that this, where's my other ES? Oh yeah, I think my realized gain here is because I rolled that one position. But you can see, I mean, my ES was doing pretty well, and I had to pull it out because we're working on the import here, because I modified my one position on here, so I can't immediately put it back into automation. But ultimately, me moving this down was helpful. I would actually be even worse off had I not done that, and maybe I'll have to do it again. But that's just one of those scenarios where I'm trying to manage a little bit of risk, but I'm trying to keep it a little bit on because it just seems so extreme. I didn't touch these. Maybe I'll have to touch these a little bit and roll them down, and see where we go from there. But just manage your risk is the, I guess, name of the game, and don't do what I'm doing from a manual perspective. Always follow the trading plan, and let's see what happens here, because it's definitely getting very interesting. I'd say stocks are definitely pricing in quite a bit of recession possibility. If PEs get down enough, obviously there's going to be people who see value in that. Maybe Warren Buffett will come out saying he's selling puts on the S&P right now, which would be smart. I'm sure he actually is. Which is, again, if you're not doing it yet, I would start very small. But typically, historically, VIX over 40 is a good time to be at least starting to buy or do a partial buy. Just to give you the plan on my 401k, I basically rotated another 20% into equities on Friday. I have another 40% effectively that I could do, so I'd probably do another 20 on tomorrow if things stay down, or just in general. I guess if they are down, I'll probably do another chunk. But because ultimately, even if this gets more extreme, I think it's a pretty decent buying opportunity. If we can kind of look at the long-term trend here, it's starting to come back into probably reason, because we'll end up, I guess, opening up right around here. So basically you're going back to 2022, or right at the beginning. And I was talking about how it feels a little like 2022, but look at how extreme this is. This is way more extreme than any of those moves. Bonds, let's just go over it real quickly because I don't want to not cover things that are decent, but bonds are rallying a little bit. They're not rallying a ton, which probably because they do expect this to be a bit inflationary as well, so it probably can't rally huge, but it at least is a risk off kind of flight safety scenario. But yeah, I think that I'm going to do another video on kind of PEs and where I think it can go, and you typically want to try and line up the fundamentals with technicals, I would say. But I mean, if we're going all the way back here and we're using the much more shallow kind of trend line, depending on where you put it, I mean, it's starting to get closer to that level of where there should be some support, but you never know. So I think that, let's see if the McClellan oscillator ever updated here. Yeah, I mean, I guess that's kind of interesting too, where people have said this, a lot of stuff has already sold off quite a bit. A lot of it is from, large cap tech. So I would have expected this to be at a pretty extreme level. If we sell off again tomorrow, I would say it's probably going to be ending up here again. But that's, again, usually a decent time. VIX is spiking, getting oversold, can always get more oversold, but those things are kind of lining up to be a decent time to both leg in or maybe get a little more aggressive, or for sure just sell some volatility if you have the capital to do so. So anyways, hopefully you're appreciating this live kind of lesson that I'm learning again, and definitely didn't expect it to be so extreme, but I think definitely just the takeaway is keep it lower, lower exposure to any one single asset class, and you'll be fine, because again, on Thursday we had that sell off, we were pretty much okay. I should have taken down my ES position, right, in hindsight, but hindsight's always 20/20. So let's see what happens tomorrow. I'll be curious. I don't think Trump's going to say anything. Maybe he'll try and do something to lighten it, but you can't bet on that. He has to keep a strong stance, whether you agree with it or not. I mean, he's kind of committed to it, so that's kind of his strategy, and so he probably needs to commit to that strategy. Oh yeah, as I'm seeing this headline, let's look at Bitcoin. Because it was hanging in there on Friday as well, which was interesting, but I guess now it's, definitely down. So could be a similar scenario. I mean, obviously you can kind of see this has been a downtrend this entire time, but it could be a similar scenario to what I'm kind of talking about in terms of, XRP, or this is kind of the place people are going to have to get cash from if they get any kind of margin calls. So this is usually what happens as you're getting close to a kind of capitulation on bottom, because everything is dropping, people are selling everything, or they have to, they're forced to, and then you kind of start to form a bottom. Usually it's not a V recovery. If he came out and significantly altered the tariffs, of course, then it could really rip, which is then why it's annoying that you end up not really participating, because you've lost a bunch of capital to participate with. But we will see what happens. Stay tuned. I'll do another update after tomorrow's market close, and let you know any kind of changes I've done. Thanks for watching. Ask any questions or comments in the comments below. Let me know.